Hey guys, welcome back to our channel. Thank you so much for joining us today. Today we'll be speaking about NIO finally delivered. Xpeng and Li Auto crushed deliveries. Please watch the whole video to find out all the details. Alright then, let's get started. NIO is a Shanghai-based publicly listed company launched in 2014. The EP9 two-seat sports car, the firm's first electric vehicle, was unveiled at its founding. With the ES8, ES6, and EC6 models, NIO swiftly established itself as a top brand for electric SUVs. Xpeng Motors, like NIO, was launched in 2014 and is based in Guangzhou South. Last summer, Xpeng decided to go public on the New York Stock Exchange, amassing $1.5 billion in the process. Since then, the business has released two electric vehicles, the G3 SUV in 2018 and the P7 sedan in 2019. Li Auto, a Beijing-based automaker that achieved a US $1.5 billion dual offering in Hong Kong last month, stated that August deliveries increased by 248% year-over-year to 9,433 vehicles, up 9.8% from July. Facing logistics system restrictions during COVID-19, Shanghai's NIO delivered 5,880 cars to consumers, up 48.3% from last year but down 26% from July. Xpeng, based in Guangzhou, shipped out 7,214 units, up 172% from last year but down 9% from July's 8,040 records, citing similar disruptions. Due to supply chain challenges, NIO lowered its third-quarter delivery target to between 22,500 and 23,500 vehicles, down from a previous prediction of between 23,000 and 25,000 units. The NOP, navigation on the pilot system, from NIO can make decisions like accelerating around a slow-moving car, but it still needs human interaction. Based on orders it's received, Xpeng, which has been exporting electric cars to Norway, expects a comeback in the fourth quarter, forecasting that monthly production would surpass 15,000 in the third quarter. Although NIO and Xpeng have been manufacturing electric vehicles in China for roughly the same amount of time, their tactics have been somewhat different, with varying degrees of success. Due to recent carmaker delivery announcements, NIO and Xpeng are expanding and multiplying. The stock prices of NIO Inc. Class A ADR, Li Auto Inc., and Xpeng Inc. all rose on Wednesday. The advances are because it is the beginning of a new month, implying electric vehicle manufacturers are reporting their production figures. Xpeng outpaced rivals NIO and Li, with November automobile deliveries hitting 15,613, a 270% rise year-over-year and much beyond the 10,138 reported in October. Year-to-date deliveries have already surpassed 82,155, a 285% increase. Despite strong delivery efficiency, Xpeng stocks have been unable to hold onto its opening gains, with the company falling down 1.5% after initially gaining to $56.45. Both Xpeng and NIO continue to develop and are on track to have record-breaking years in deliveries. In June, NIO delivered around 1,500 more electric vehicles than Xpeng, which may not seem like a significant difference, but year-to-date deliveries are more effective. So far, in 2021, NIO has delivered nearly 4 times as many electric vehicles as Xpeng. But don't write Xpeng off just yet. Xpeng is expanding at a significantly quicker rate this year than NIO regarding the raw amount of deliveries. NIO's 116% increase in June compared to 2020 is dwarfed by Xpeng's 617% increase in the same period. Year-over-year comparisons for the second quarter reveal a similar pattern. While NIO witnessed a 112% increase in deliveries in quarter 2 compared to 2020, Xpeng doubled that number with a 439% raise. The key takeout from these statistics is that EV deployment in China is rapidly increasing. NIO and Xpeng, for example, are obviously at the vanguard of this paradigm shift, and they'll continue to prosper as they split the EV market pie with Tesla. In November, NIO delivered 10,878 vehicles, up 106% over the previous year. Due to manufacturing line shutoffs to prepare for new models, it's a substantial upsurge from the 3,667 deliveries in October. 4,713 ES6 SUVs, 3,482 EC6 hybrids, and 2,683 ES8 vehicles have been delivered. NIO expects to produce 23,500 to 25,500 electric cars in the fourth quarter, unchanged from the third quarter. Xpeng delivered 15,613 electric vehicles in October, up 270% from a year ago, and 10,138 in October. 7,839 P7 sedans, 5,620 G3 SUVs, and 2,154 P5 automobiles have been delivered. It had expected 34,500 to 36,500 deliveries in quarter 4, significantly above the 25,666 in quarter 3, but it seems to be on the pathway to exceed that total easily. Chinese electric vehicle manufacturers are gaining headway on Tesla, a crucial competitor. Tesla China's sales and exports will be available to investors in 2 weeks. Consequently, the stock of BYDDF plummeted 4% to 37.25 on the stock exchange. The supply of Li Auto has dropped 16% to 28.50. As per MarketSmith, NIO stock has lost 11.3%, sliding lower below its 50 and 200-day lines. The supply of Xpeng fell 9.3% to 43.79. Meanwhile, a California-based electric vehicle manufacturer, Tesla, is down 6.4% as CEO Elon Musk sells the additional stock. Part of the motive for the weakening in NIO, Li Auto, and Xpeng stock is that U.S. regulators are moving forward with a regulation that forces foreign businesses to open their records to U.S. examination within a 3-year timeframe or face delisting. It shows that Chinese EV manufacturers can obtain the semiconductors required to create automobiles. A global semiconductor shortage has hampered worldwide vehicle production throughout the year. Li, for example, claims that his company's monthly assembly capacity is around 14,000 pieces. Due to a scarcity of chips, it hasn't been able to do so. Another benefit for the automotive sector would be resolving the semiconductor supply crunch in 2022. The movement of the 3 Chinese EV stocks on Wednesday could be influenced by recent trade. Xpeng's US-listed stocks had surged more than 17% in the previous month as of last week's trading. Li stock has risen by more than 14%. Over the same time, the S&P 500 and Dow Jones Industrial averages have declined 1% and 4% correspondingly. The worst performers have been NIO, which has dropped more than 5% in the last month. A share sale that took place in November harmed the company's stock. About $2 billion was raised by the firm. Well, that's all we have for today. If you enjoyed today's video, don't forget to like, share, and subscribe. Until we see you next time, ciao!